I often hear a question that goes something like this. My spouse is a real estate professional. Can we write off the losses from our rental against my income as a doctor? So my answer would be yes, but only if you materially participate in managing your property. That's the key. So what the heck does that mean, you may ask? Material participation test is a tax concept found in Internal Revenue Code under Section 469, and it's a rather foreign concept to most of us. So before I talk about what it is, how you can meet the material participation test, let me just talk about the tax mechanism behind this strategy, which is called Real Estate Professional Status, REPS strategy, which would allow you to write off the rental losses against your doctor's income. So there are 4 tax concepts that I want to share with you today. So concept number 1, there are 2 types of activities, passive and non-passive. You probably heard this before, but the key is the losses from passive activities cannot be used to offset income from non-passive activities. So let me repeat. Losses from passive activities cannot be used to offset income from non-passive activity. Very important. So second concept is that all rental activities are considered passive activities. All rental are passive. So when you combine these 2 concepts, then what you get is your rental activity is passive, and its loss, being passive, cannot be used to offset your non-passive income like your doctor's income, W-2 job income. This is what we encounter as a physician with rental properties. Essentially, our rental losses are not going to lower our overall tax liability because it does not lower our doctor's income. So the third concept is, in my opinion, particularly interesting, confusing. So rental activity, which is inherently passive, is reclassified as non-rental activity if you're a real estate professional. So let me repeat that. If you're a real estate professional, the rental activity is now non-rental activity. It's like a chameleon changing its color. And there's a lot of these in tax code. So it's confusing. So the fourth concept is that your rental as a real estate professional, which is considered as non-rental activity, still has to meet the material participation test in order for the activity to be considered non-passive. So let me put these 4 concepts together. So while rental activities are passive by default, rental activity by real estate professional is considered as non-rental activity. So rental becomes non-rental activity. And when you materially participate in your non-rental activity, that activity now becomes non-passive activity. So that the losses from your rental as a real estate professional now is a non-passive, can offset your W-2 income, which is also non-passive, right? So now let's talk about material participation test itself. It's a rather foreign tax concept, and it could be confusing. And there are 7 ways to meet the material participation test. But I'm going to simplify it and talk about the 3 most common tests that people meet. So they are 1, 500-hour test, 2, the 100-hour and more than anyone else test, and 3, the substantially all test. So let's talk about one at a time. So 500-hour test is met if you spend more than 500 hours performing day-to-day management activities, such as cleaning rental, responding to customer client requests, managing repair and maintenance. Spend 500 hours doing that. The second way to meet material participation test is the 100-hour and more than anyone else test. And it is met when you spend more than 100 hours performing those day-to-day management activities, and you spend more hours than anyone else in the rental activities. So third test, the substantially all test, is met when you're essentially the only person involved in the rental activity and spending hours. Okay? So most physicians with rental real estate professional spouse, meeting the material participation test is what can be challenging. So even if your spouse spends 1,000 hours as a realtor selling homes, unless either you or your spouse materially participate in the rental activities, you're not going to be entitled to use the net loss from your rental against your W-2 income. So the most important thing is to find ways to meet the material participation test. So word of caution is that there's a higher risk, audit risk, when it comes to real estate professional status strategy. So make sure to document every hours that you spend meeting the material participation test. Additionally, you must generally meet the material participation test every single year to utilize the real estate professional status strategy, REP strategy. One exception to this is that if you have met material participation tests at least 5 out of the last 10 years, you're okay. So remember, material participation tests, and it is oftentimes what determines whether you can utilize a REPS strategy or not. Hope this helped. Until next time.